Welcome to another seminar series here, brought to you by Chris Hallows, Benchmark Mortgage, and Amanda Maestas.
Hello.
Realty One Mountain
Realty
Desert.
One, sorry. With Realty One Group, Mountain Desert.
I gotcha. So this one, super excited to talk about this one. This one's our Home Ownership 101. I love that, and I hope if you're watching this and listening, like, kudos to you because you care. And so many times you think, oh, people just need to go buy a house and then you're set for life. Like, you can set it and forget it. But there's so many different things that a homeowner should be. Unless you got a sprinkler home, it's the perfect home to meet your needs. You never care about moving, and you are fully legally protected on it. You're keeping track of the maintenance. Basically, there could be something you need to hear in this.
Yes.
And I would go so far as to say many of the homeowners, as we're looking through some of these like questions and things, many homeowners would actually be pretty surprised to find out that they might, as far as like a grade on your home ownership, most people are probably around a C to D.
Yeah, I could see
like
that.
Close to failing and exposed to major risk. Mm-hmm. I'm not trying to be alarmist with this, right? Me and Amanda are not trying to sell you on anything here, but this is just purely out of wanting to help the homeowners here in Northern Arizona. Again, meet your presenters here. We'll just go through that slide here. Amanda and I, licensed real estate and mortgage professionals here for I think it's kind of fun that we're both similar timing here in the Flagstaff industry, and really going to focus on having a safe place you can call your home that meets your space needs, fits financially, and positions you for you and your family for your best future. And on the House Happy goal, you've hopefully heard this campaign of ours. For homeowners, this can mean a lot of different things. It doesn't mean like go find a home because you already have the home, but what are you doing with that now?
Yep. Right?
So let's get into it here. We're going to do a homeowner pop quiz to find out if you are the equity optimizer or a solid owner, or you've said it and forgot about it, or you're a totally at-risk nightmare here. So we're going to go through these questions just kind of quickly. So you can pause and kind of just mark in yours, just grab a piece of paper. So you can pause here, right? Go through questions 1, 2, and 3, and mark what you would do, A, B, C, or D. We're going to then go to slide 2, questions 4, 5, and 6 here. Jumping into the next slide, questions 7 and 8. And then we're going to round out with 9 and 10. Hopefully. Did you see any, as we perused through that, did you see any that you're like, oh, I could do something?
There is a couple that I would do that we have not probably done, the inspection.
Yeah. Is that kind of interesting?
Don't get me wrong. I'm one of those that will like walk through a room and capture, photographically, like what I feel needs to be done, but then it either doesn't get taken care of or it's on my husband's honey-do list. And that is a big, like, is this going to get taken care of today, or is it going to get taken care of like in a year or a couple of months when he finally remembers to do it? So,
yeah. And you're a perfect example because your husband is extremely handy, right on the cusp of a general contractor's license. And you're like, he knows how to do it all. But we all know that the contractor's house or the builder's house is the last one.
Yes, the last one that they take care of. They take care of the clients first.
Yeah, exactly. And so I think it's very fascinating. Hopefully, as you went through that, everyone really take a pause to go through that. That you realize that each one of those things were very intentional that we put on there to highlight an area of ownership that you could optimize. And I would recommend at this point in time, don't be discouraged. Little goals, it's an elephant sometimes that you're like, oh my gosh, like I am totally, maybe you feel like you like were an F and you're totally a hazard to yourself and to others at this point with your home ownership. But, let's little goals, one thing at a time. And that's where we're going to talk about these. And maybe that will help you prioritize what you decide to take care of here. But as we talk about these, a lot of folks at the time of purchase, you made relatively like some type of debt plan, right? If you finance that, you talked to your lender and said, okay, we'll do the 30-year mortgage, or we'll do this rate or whatever, right? So you made some type of plan. You did some inspections, right? Got your general inspection, maybe you did a sewer scope or termite a roof or whatever. You did all that. You talked to the title company. And a lot of people are like, I did, right? Like they're probably like,
so you signed paperwork that they just sent
and they
you.
confirmed like some ideas on your homeowner's insurance. But the idea too about this is this all happened probably in a 30 to 45 day period of time. So you all of a sudden made all these major decisions and did a kind of gut check at that sliver of time. And so not only have things probably changed in your goals or the scenario of the home, but also you did a lot of things without full, like just focusing on that one thing.
Or understanding.
Yeah. Right. I have some clients right now that closed on a home several months back, and they're like, "Can we go make an appointment with the top person to actually understand what we signed?" And I'm like, "Absolutely, right." And so that's where. So jumping into this, right? Our goal through this quick conversation here today is to help you identify ways to first and foremost reduce expense. And have better debt management. Also understand the physical, legal, and financial asset protections that exist for you. And then optimize, talk about ways to optimize your overall ownership there. And so as we do that, let's jump into, I want to talk about just some ideas around reducing expenses. And so how can you reduce expense? This is going to be kind of a smorgasbord of ideas for folks to kind of pick up on, but you can call us. We can identify specific ideas for you. Have interest rates dropped, right? Are you in a position where you can get a lower interest rate? And a lot of the folks, 25% of you do have a rate you could probably benefit from a refinance of, right? Because in the last 3 years, and the mortgage is floating out there, you have a rate that you might be able to benefit on a refinance on. Do you have mortgage insurance? And I had this little asterisk right there with mortgage insurance. Government loans like USDA, FHA, you're going to have to refinance to get out of that. But if you're in a conventional loan, there are some different terms out there that can help you figure out, hey, you don't need to refinance. You can still work to get out of your mortgage insurance, especially at different time frames. That if your home value, like if you bought in like 2020, 2021 or before that, your equity has moved up so much that even if you say, I don't want to get rid of my 3% interest rate, you don't have to. You can call up your servicer. If you have 25% equity from, you'll have to get a new valuation, but you keep your interest rate. It's not a refinance. You can get that. Did you know that one?
I did that last
2
year.
years. Okay, perfect. So that's the idea. It's like, hey, if you've had rapid, equity acceleration, you don't have to refinance to get rid of that mortgage insurance. Again, you can request it be removed at 20% equity, or it's required by law to get removed at 22% equity, but that's a lot of months to get to those differences. Where if you're there now, right? Call us, we can help you, or at least give you the right direction on things. Shortening term, that's the thing that a lot of folks don't think about, right? Especially now, again, with homeowners, we're talking like, is your house happy goal really working more towards a debt elimination? And you're saying, hey, I'm going to retire in 5 or 10 years. How do I kill this mortgage if that's your plan? And does a shorter term help you get there faster? Right? Do we do a 10-year, a 15-year, right? And even if you had like, hey, I got a pretty decent interest rate, I'm at my 4% for 2019. I missed the refinance boom. Like, hey, you may be getting a shorter term, even if the rate goes up slightly. There could be some different goals or values with what you're doing. Loan recast, lots of folks don't know about that. If you do have some inheritance or some savings, or you just wanted to again, do a lump sum pay down and reduce your payments, that's an option as well. Timing of making extra payments, which we'll talk about here as well. And then also doing some analysis on, investing versus debt analysis. Because I do think a lot of folks get very debt aggressive when it's maybe they should be putting these funds away. So that's not necessarily a reduced expense, but we always want to bring that up in as far as saying the number one answer isn't always, let's just pay down the mortgage. If you could also be like saving in a 401k or getting employer matches or different things like that.
Investing it.
So any questions on those, Amanda?
No, I think we're good.
So as we talk then through the biweekly breakdown, so we get that question a lot. A biweekly payment is basically making a 13th payment per year, right? 12 months of the year, you're making one extra payment essentially is how that adds up to it, which just that one extra payment. So the way that this analysis works, I can show a monthly contribution. So I basically taken the monthly payment divided by 12 and made that monthly contribution here. And that essentially, you can see here, that's going to, in the next 5 years, that saves you, a relatively smaller amount of saying, okay, well, you're up ahead on net savings over the next 60 months, but in the long term of interest paid, you can see this freedom point of you end up paying off your mortgage about almost 7 years or just over 7 years earlier.
Wow.
And the amount of interest saved in 30 years is massive.
Yeah.
So just that one little thing. And if you said, hey, I'm going to do this on just a biweekly paycheck basis, or you decided, hey, when my tax return hits, I'm making an extra payment on the mortgage before I go buy the new mattress or whatever the big sales are trying to take your tax return money. You can accomplish that in a lot of different ways. It all kind of breaks out to the same. So kind of cool ways to consider just getting a little ahead that way. And again, when we start talking about, this is a lot of math, I get it. So call me, we can do your own personal analysis, but different ways of saying, all right, if we so column one is saying you bought, within the last 2-3 years, you have a 7% interest rate, you refinance, just the refinance alone. And maybe we're saying we're able to drop mortgage insurance as well. That individual is saving a significant amount of money, right? You can see you drop them from 35 to 3,100. If we said, okay, we're going to go ahead and we're going to, keep making the same payments, then that person has dropped from a 30-year mortgage to a 21.75-year mortgage, right? So whether a refinance can benefit you in a lot of different ways, or if you say, let's drop to a 15-year, all of a sudden, you can see how that shifts up. That rates are significantly lower, different goals, right, across the board here. But the idea in illustrating and throwing, hopefully this is not causing too many people to go cross-eyes with all the numbers, is that there's a lot of different ways that we can restructure that debt. And a lot of different strategies, some of which could be, let's do a transaction. Some of which could be, hey, you're in a good spot. Let's just, work with your servicer, get the MI dropped, do a recast. There's lots of different ways that you can do that. So that's then, and I showed some long-term perspectives on how those impact, so here's the interest savings. So just alone, if someone went from that, 30-year mortgage and decided, okay, I'm going to do the 15 now, you can see that they basically almost cut to 1/3 of the interest over the term of the mortgage. I mean, that's huge, right?
That's
so
major.
Everyone just kind of makes, we're on auto draft, you're making your payment, you're not thinking about this stuff, but really, are there ways that you can be significantly reducing your overall costs on the home? Pretty sure over a 30-year period of time, you could figure out what to do with $400,000.
I could.
Yeah. Might change your retirement perspective a little bit, right? And so really, again, it's all about the goal, right? So my little target here, an example of what is the goal here. I did want to recommend and talk to folks about a mortgage offset account. Have you ever heard of that before?
I haven't.
So what a lot of folks say, well, great, we'll just keep making those extra payments like it is here. But I always want to be the devil's advocate there and say, okay, is that the best thing for you to be doing? Right? Do you have, I know you have young children, is a free and clear home the number one priority, or is also getting those kids raised, paying for their sports, getting them maybe to college and all these different things. So sometimes it's a matter of saying, okay, you have a lot of other financial priorities, and where does a free and clear home fit within those priorities? And so I do tend to like the idea of what a mortgage offset account is saying, okay, we are saving towards paying off this home, but that account is available to us to say, no, it's investing, it's growing interest. And if we want to pay off the mortgage right when the kids leave the house, great, we'll do it. Or if it's still making money for us, we'll just keep it there.
Keep it there. Yeah.
Right. So it's creating flexibility, right? Have some charts and graphs on about, that type of thing built in there. So let's talk about insurance, right? We were talking about a lot of us see big events, right? You said when you saw the Palisades.
Yes.
Right. And terrible, horrific events happening where people are doing insurance claims and having issues with those claims. What are some of the things that you did with your insurance when you saw that?
Well, seeing that, and people having a hard time getting insurance in Flagstaff too because of just the fires that we had for the last few years, with prices doubling for a building. I wanted to see what the cost to replace my home would be, and I called my insurance right away, and I did some extra coverage just to make sure, and I put it on my calendar so that every year I go back and I call them just to see, if we need to bump that up a little bit more, just to make sure that our structure is fully covered if anything were to happen.
Yeah. And so, several different things from the coverage amounts. Like you said, building costs change. Typically up, right? And so knowing, are you covered for that event? And I know some people might have this idea gosh, I don't want to give another cent to my insurance company. But unless you're self-insured, if you're self-insured and you don't have a mortgage, because I'd say both of those, right? Because if you don't have a mortgage, you still need to be say, okay, you're going to have to, are you going to be able to rebuild that house at your own dime? Does that make more sense for you? And I get that you can go into this big, philosophical argument against insurance, but the bottom line is, and I have made insurance claims in my life. I have seen a benefit to my insurance. So, but saying, and I get it, that can you find, so this is from a couple standpoints, are you getting the right coverage that it's doing its job, right? And then are you working with, are you comparing, because premiums can change, and you're working with, so, the individual's contact that we have here is a broker and compares companies for you. And so that's where, not that we're overly trying to push that individual as much as that concept of, hey, if you need more dwelling coverage, but you want to also be cost conscious, you just because you picked one insurance company when you close on the house doesn't mean you're like,
You're not
that
married
you
to
now
them. You
have a
don't have to stay
tattoo.
with them. Yeah.
Yeah, that you're them for life, right? And then understanding the claim impacts, right? This has been something that's been helpful as I've continually educated myself on like, oh, I need to be like, what's my strategy and what do I set my deductibles for on little things happen that I just take care of it and I don't impact premiums down the road. And knowing the game, and I know people don't like it when I say game, but whatever you want to use for that is there's rules to that.
Yeah.
And you can be upset about it or you can just understand it and figure out how to work within it, right? And then, and reviewing all your policies to know it's covered, right? We had a lot of folks that have dealt with flood issues from the fire areas that don't have flood insurance, right? So how does that work? And it's so much nicer to, it's that whole like, and I know this is probably cliche, but like those who are prepared will not fear, right? If you're like, if your house is filling up with water, be like, I've talked to my agent about this event. I either prepared for this or understood my implications on this. Then great. Whereas if you're like, oh shoot, like I don't have any idea what I need to do. And some people like, sorry. And sorry if this is you. If you say like, I don't even know who my insurance agent is. I had a client email me today, like, who do I talk to?
Yep.
I'm like,
just had that last week.
You are paying them per month. You should know this, right? They should talk to you, whoever your agent is. I'd always connect with your current agent and talk to them about these types of things, and be educated on it, right? And we see a great opportunity to reduce costs. And even if it's with that same, you always got to be your own advocate. Hopefully your insurance agent is reaching out, but being able to say, hey, we can shift to this other provider. They don't have the same fire risk in Flagstaff that others are putting out there. So you get better coverage and you're saving money.
Yeah.
That can happen, right? Or you're increasing coverage and you're paying more money, but it's good. Any other thoughts on insurance?
No, I would just say, especially contacting your agent, because some people just, their prices go up and they don't question it. They just keep paying it. And, last year my price went up. Like my insurance, my mortgage was all of a sudden $250 more than it had been. I'm like, what happened here? And I just got rid of my mortgage insurance too. So I'm like, this doesn't make any sense. I thought I was like going down.
Yeah.
And so I called right away and, my homeowner's insurance doubled. Like it completely doubled. And so, I got to call Cameron. I actually got to experience working with Cameron, and he literally saved me $1,200. So I switched. I got more coverage, and I switched my car insurances too. I saved money on that. So all around, it was just such a positive experience because I otherwise would have just kept paying it. And I've talked to my clients who said, oh yeah, my mortgage just went up. I'm not really sure why. And they just kept paying it. And it's like, that's great that you can afford an extra $250 or $300 a month for no reason, but I wasn't going to do that. I needed to know why. So I would say, this is probably the one thing that if you're going to do anything, this is the one thing you should keep on top of.
100% from a liability standpoint and from a cost savings or cost understanding and justification standpoint. And I have so many, like the vast majority of folks that we're serving are doing 30-year fixed mortgages. And so if your mortgage payment is going up, it's only because of one of two things. Your taxes went up or your insurance went up. We've had a lot of folks call us of like, oh my gosh, I thought I had a fixed mortgage. And you're like, let's look into this. Like, why did your mortgage insurance go up so much? And you're like, oh, it looks like last month you got this renewal notice that your insurance was like doubling. Did you call anyone? Did anyone call you? And they're like, no. It's like, well, the like doubling impact of your $1,000 a month insurance to now $2,000 a month. And now you're behind on getting that caught up and your mortgage payments, like, it just, understand it for sure. So let's jump into, so we have, the insurance, so reviewing costs, coverages with agent, comparing premiums to market, understanding claims. But also I did put tax out here to where I'm not going to be a big proponent of like everyone needs to go dispute their tax bill, but you can understand it. Everyone gets their tax bill. There's a website that you can understand it. And if you have issues, you can always talk to the county about that. One of the things that I thought this was hilarious to where comically we can laugh about this now, but like I had a tenant email at one point in time saying there's water on the ground near the vanity. Like, let me know how to proceed. And there's just so much to that on like, is it splurting? Is it a puddle? Is it like, is it coming from the,
where is it coming from?
Where is this water and how serious is this water? And so guys, you probably did a home inspection. And how active have you been on it since, right? And I think it's fair, and that's the hard part is I really appreciate from that quiz when it's like, do you fix things when they break? And I'm like, oh yeah, I do that. It's like, but do you fix things before they break? And I'm like, no, I'm really bad at like, that proactive maintenance and preventative maintenance because I'm cheap, right? Just like everybody else. But we know, and especially, and I've had to deal with this of like, all right, now you got to pay that weekend premium to the plumber because
everything happens on the weekend.
We need it. You got to get water running in the house, or you got to get that leak fixed. And that's time and a half typically, or double.
Oh yeah.
And so it's like, okay, well, it's costing you more. So like, are you doing these checks? Are you regular? And I don't have it in here, but just a really quick, email Amanda for a little checklist, or honestly said, jump online. There's a gazillion out there of like, what are preventative, and be to the Four Seasons and to Flagstaff of like, what are the different inspections and checks, and work to start budgeting it now and planning now. Like it doesn't hurt when you say, oh, I talked to the HVAC guy. He came in and he said, yeah, this is going to run for next little bit. We'll tune it up. But in the next 3 to 4 years, you need a new water heater. Right? Or you need a new HVAC.
At least 3 or 4 years in advance and not right when it happens.
Yeah. And a lot of those folks, I'm sure, actually do like free inspections and things. Just come check it out. And,
most of them do.
Yeah. And so get on it now versus calling them on a Saturday and all of a sudden you're like, my heater's not working. It's 30 degrees out. It's going to freeze. My pipes are going to freeze. And now I'm freaking out.
And when that happens, and when we get our storms here in Flagstaff, I feel like that's what happens everywhere. Like everybody's roof all of a sudden is built up and they have, ice dams coming down the side. You can't get a roofer out because they're completely busy.
Yeah.
And then the heaters. You can't go buy a space heater anymore because they're sold out everywhere because that's what everybody's running to do.
Yep. So. And just stress reduction, right? Avoiding the further damage and the emergency hour charges, right? So I know that's kind of common sense, but we all have a little bit of guilt there. Let's talk about the ownership protections and intent. And that's where lots of folks did that. The closest thing they did to anything on this was how the manner they took title, right? But not understanding of if anything happens to you, what happens to the home? And do you know that? Right. And I'm not an attorney, so I'm not going to dig into this too much. I've given you a reference for a fantastic estate attorney, that it does a free consultation for any of those here watching the seminar. But things like, all right, a trust, a will, a beneficiary deed. If you have rentals, what the value of putting that into an LLC or not, and have you recently reviewed that with your loved ones, right? Because again, and not to be that guy that's trying to push anything other than just saying we see it unfortunately frequently. Yeah. Right, that all of a sudden an event has happened, a spouse has passed away, or the parents have passed away, and now it's in probate, and that's cost.
Take a long time.
Time and cost, and on top of, I was actually listening to this interview with a real estate investor's wife, and she was just saying that she had just lost her husband, her life partner, and now instead of being able to just focus on that moment of life and grieving, she's dealing with all this legal battle around all this ownership and stuff just because things weren't as tight as they should have been. Right. So don't put that on your people. Again, plan now. Mm-hmm. That's all. Do you have any other things to add on that?
I mean, just that we do see this happen a lot. I mean, the amount of times it's happened with clients who were selling their home, their parents, a lot of it's like inherited, their parents had passed away and it's been already wrapped up in probate for 2 years and it's still taking time. So it's a lot of stress. It's a lot of stress and added time that some people just might not have. So taking care of it sooner than later is definitely recommended.
Yeah. And again, these all fall into a similar vein, and just don't be caught surprised or put people in a moment of surprise or issue, right? Yeah. If you're like, oh gosh, I have an insurable event or issue and I'm not covered properly, or I don't know how this works, like then you're causing pain and cost, right? And likewise with deferred maintenance, and likewise with then ownership. And this can be a huge one. Say, just take, yes, I know we're all cheap. I'm cheap, right? And so people hear attorney and they think this is going to be like massively expensive, but there's lots of different avenues. There's lots of different paths, lots of different providers to be able to at least take some preliminary steps, even if it's going and updating the title of a home or different things. Yeah. There's lots of relatively low cost avenues to start getting a plan together. Yeah. There's stronger plans than others, but do something. At least understand it.
Well, when you also think about the cost that it can incur down the road too, I mean, is a little bit of money right now. I mean, I feel like it's worth it now than what it could cost you triple, quadruple down the road if something were to happen and it wasn't taken care of.
Exactly. I think this falls in the same vein with all those. And then rounding out here, ownership tools, knowing that you have equity, right? What can you use that for? Is that a renovation, a debt consolidation? Are you going to go invest in other real estate? Do you have other life goals like college or business startup, et cetera? There's tools. I mean, typically getting equity out, we're looking at three main tools of like a second mortgage, an equity line of credit, or a cash out refinance. But do you have goals and does the equity serve you? And I know, again, a lot of folks will put the blinders on, especially our friends with 2 and 3% interest rates are like, oh, I'd never do something like that. But hey, you have a lot of equity. What's, getting rid of that 2 or 3% interest rate, we may never want to do, but there's other ways that we can tap into equity and serve other purposes. So I'll kind of leave it there. That's pretty specific to use needs, but that's where, as you talk with the man, they're like, okay, should I renovate my home? And what does that do for my value? And then should I actually move up, or talking with me, and do I do an equity line, or do I just go buy a new home? And like, these are all comparisons and analytics we can run for you. So that, again, just getting you to that next house happy goal. Reach out to Amanda and myself with any questions so we can help you optimize your ownership. And a lot of these, whereas we may be talking with home buyers that want to buy a home in the next 12 months or 1 to 2 years here. A lot of these homeowner house happy goals could be longer time frames, but connect now, right? You could say, hey, we want to sell in 2 or 3 years and move up, or we want to renovate over the next 3 to 5 years. What does that look like? Connect now and start getting that plan together. Anything else to add?
Nope, just that we're happy to help.
Awesome. Thanks, Anna.
Thank you.